The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. My name is Ken Shreve, back in the saddle again after 1 week off, vacationing on the big island of Hawaii, following the market with one eye while I was gone, but great to be with you today again. Just a reminder, my show airs every Tuesday and Thursday on TFNN from 3 to 4 p.m. Eastern. You can get my show also as a podcast on iTunes, and don't forget you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi in your smartphone browser, and you can get the stream that way as well. I'll be going over charts on my program like I always do. I use a combination of fundamental and technical analysis for my Ultimate Growth Stocks model portfolio and newsletter. If you want to get a free trial to Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. Just click on the newsletters tab right at the top of the homepage. Then after that, click on investment newsletters. You can get 30 days free of Ultimate Growth Stocks, and I have about 13 stocks in the model portfolio right now. I'll be looking to, pare that down in coming days and weeks, identify my strongest performers, and start to slowly but surely funnel money into, the best and strongest performers. And of course, very happy to be long Priceline.com. We'll get into Priceline. I've got a nice big cushion now in Priceline after the online travel firm reported outstanding earnings last night. Okay, so let's take a look at the market here. Tiger TV, if you want to look at charts right along with me, right on the homepage of TFNN.com, you can. The show is live on Channel 1 every Tuesday and Thursday, and the show is also archived on Channel 13. So taking a look at the Dow, let me go ahead and just refresh this Dow chart here. See where the Dow's at. We've had a little bit of selling in the market over the past couple of hours, but not too bad. The Dow right now up close to 16 points to 12,997, so hovering right around that 13,000 level. The Dow here, what I've done is I've plotted the 10-day, 20-day, and 50-day moving average for the Dow, and I've done that. Well, to show you the NASDAQ and the S&P 500 in just a little bit, but you can see that the Dow has been, riding the 10-day and 20-day moving average higher for several weeks now. Interesting that the Dow, even if it were to correct down to its 50-day moving average, which right now is around 12,579, so even if the Dow loses about 400 points from here, that's only going to be a pullback of about 3%. Which, a 3% pullback, considering the scope of the Dow's gains since late November, pretty mild pullback. So let's take a look at the S&P 500 as well, and you'll also see I plotted the 10-day, 20-day, and 50-day moving averages for this index as well. Right now, the bogey is up 2 points, almost 0.2% to 1369, and same situation for the S&P 500. Its 50-day moving average is down at around 1307. The S&P 500 would have to pull back 5% to get down to its 50-day line. And again, at some point this market is going to pull back. I mean, the bears are waiting for it to happen. Market has a lot of things going for it right now. The dollar continues weak. We'll take a look at the dollar in just a second, but a weak dollar. Quiet headlines out of Europe, and a pretty steady stream of good earnings reports, solid consumer confidence. So sellers are just being completely kept at bay at this point. But we will get a pullback at some point. When I look at a daily chart, I look at the daily chart of the S&P 500 here. It's definitely looking a little bit tired. But that said, the trend is upward until proven otherwise. And, we could start to see a shift in trend when you start to see signs of institutional selling in the market. In other words, higher volume declines for the S&P 500 or for the NASDAQ, but really just not seeing anything in the way of institutional selling at this point. Some very, very mild signs here and there, but you have names like IBM and Microsoft, so many stocks out there that are just acting right. So it's certainly too early to declare this uptrend over, and there's no reason to get decidedly bearish at this point either. Okay, so let's look at the S&P 500. 5% pullback, 4.5% pullback for the S&P 500. We'll take it down to its 50-day moving average, and then let's take a look at the NASDAQ composite, and that is up 12 points off its highs, trading right in the middle of its trading range today. NASDAQ up about 12 points to 2978. It certainly has its sights set on NASDAQ 3000. Again, you see the 10-day, 20-day, and 50-day moving average for the composite plotted here, and NASDAQ gets a little further down to its 50-day moving average. That would be about a 7% pullback down to the 50-day line, which would be extreme. But again, the NASDAQ has since December 19th, I think it's up 16, 17, 18%, something like that. So possible we could see a retracement here for the NASDAQ as well, but it's not going to happen until we really start to see meaningful profit taking, and what is going to be the catalyst for that to happen? That's the big question. But the bottom line for individual investors out there, the trend is upward until proven otherwise. And again, when it comes to my ultimate growth stocks model portfolio, have a lot of stocks that are working in there, and I'm really just paying attention to just watching for sell signals at this point. I never sell a stock just because it falls in price and heavy volume on one day. I'm really going to be just looking for stocks at some point to start breaking support. It may take a while for that to happen, but you really need to see the leaders start to break down in heavy volume, some of the big strong performers over the past several weeks, until they start showing meaningful sell signals. Again, no reason to get decidedly bearish here. Volume on the New York Stock Exchange and NASDAQ today tracking just a little bit higher than Monday, not by much. It's pretty close. NYSE volume on Monday was slightly below average at around 730 million shares, so we'll see probably right around that 750 million share level today, unless things change drastically between now and over the next 45 minutes. So NYSE volume on Monday, 730 million shares. We're tracking just a hair above that today. NASDAQ volume on Monday, 1.7 billion. That's about average, and NASDAQ volume also tracking just a hair higher than Monday's level. Mentioned the headlines from Europe have quieted down quite a bit. Interesting to hear JP Morgan CFO Doug Braunstein today. He told investors that the risk of losses from the bank's $15 billion net exposure to Europe has declined. So that was an interesting little tidbit from J.P. Morgan today. Let's take a look at JPM on the New York Stock Exchange. That stock is up 12 cents right now to $39.18. Let's take a look at the Philadelphia Semiconductor Index, because that was outperforming at one point. There it is, the SOX. Philadelphia Semiconductor Index right now up 1.3% to 429.78. So the SOX still looking pretty strong technically here. Here's a look at some chip makers. Let's take a look at Skyworks Solutions, SWKS, on the NASDAQ. That stock, after early strength, it hit an intraday high of 27.36, but now it is trading near its session low. It's now down a penny to 26.58, but Skyworks has been a top-performing chip maker. And let's not forget about large cap Dow component Intel. Again, so many large cap names out there acting well. Not only large cap, but mid caps and small caps as well. Let's look at shares of Intel up about 1.1% today to 27.18. It continues to boast a pretty strong technical picture. And finally, in the chip-making group, here's a look at Micro Semi. That's MSCC, Micro Semi. That stock is up 20 cents, 0.9% to 21.42. So chip stocks outperforming today. Let's take a look at UUP. We talked about the strength in the, or the weakness, I should say, in the U.S. dollar. And UUP is interesting. Here's a look at a daily chart. And I'm going to show you another look at this chart, but the PowerShares Deutsche Bank U.S. Dollar Index Bullish Fund. This is an ETF that's basically comprised of a bunch of long U.S. dollar contracts. The chart is very similar to the U.S. dollar index. Right now, the UUP is lower by 9 cents, 0.4% to 21.79. Now, I'm going to get another chart here for UUP. And this is going to be a chart that shows that the UUP is really at an inflection point here, because it is right down at its session low at 21. Its low today is 21.78. It's currently trading at 21.79. Notice its 200-day moving average right at 21.77. So it's 2 cents above that 200-day moving average line. I think this is significant. If the UUP firms up here and finds a bottom, you know, and it essentially finds support at its 200-day moving average, this could be a catalyst for some selling in the major averages. The other scenario is that it continues to act weak technically, and it just undercuts its 200-day moving average. And if that happens, one would expect even more selling in the U.S. dollar. So really, the U.S. dollar index, the UUP, really at an important juncture here. Does it find support at its 200-day moving average, or does it not? So that'll be important to watch over the next couple of days. Economic data. Orders for durable goods fell 4% in January after rising 3.2% in December. Earlier today in pre-market trading, futures were pointed towards a nicely higher open. This durable goods data came out, and the market, a little bit of selling in the market on this weaker than expected report. So it was a bigger drop than expected. Economists were looking for a smaller decline in durable goods orders of 1.4%. So 4% decline in January was a little more than expected. Meanwhile, big jump in consumer confidence early today. The Conference Board's Consumer Confidence Index jumped all the way up to 70.8 in February from 61.5 in January. So that was a very big move for that index, and the strongest reading since February 2011, almost 1 year. S&P Case-Shiller 20-city composite fell 1.1% in December. For all of 2011, it lost 4%. So home prices still struggling here. The index is now at its lowest level since February 2003 and is now 33.8% from its peak. So home prices still struggling. All right, folks, thanks very much for tuning in. We'll be coming right back in about 4 minutes. We'll go over some hot earnings reports today. We'll be right back.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. It just occurred to me that I didn't give out the phone number. If you want to call me and talk about this market, you can do so toll-free, 877-927-6648. Let's take a look at shares of Apple. There was news that there's going to be a product introduction next week on March 6th. And shares of Apple up $8.86, 1.7% to $534.62. And you can see Apple on Tiger TV here with the 10-day, 20-day, and 50-day moving average. These are support levels for the stock. So when Apple does pull back, does it pull back to 513, 514, and find support at the 10-day moving average, or is it a steeper pullback, maybe down to the 20-day line at 493? Or if the market really sells off, could we see Apple come all the way down to its 50-day moving average, 446? That's about 80 points, 90 points below where it's currently trading. So I like the 10-day, 20-day, and 50-day moving average. Gives me good perspective. It does identify support levels for a stock. But again, Apple on March 7th is going to be introducing the third-generation iPad. A lot of speculation about what the new iPad is going to have. Probably a faster processor, better resolution. Some talk that Siri may be involved or maybe a part of the iPad 3. So we'll have to see. I have to tell you that there seems to be excessive euphoria around Apple right now. I never like to see excessive euphoria around a stock because it usually comes ahead of a pullback. Clearly, Apple is very, very extended in price. Should not be touched with a 10-foot pole up at its current price around $534. Remember, Apple's breakout. It gapped up right in this area here, but really the last swing point for Apple was around 425, 426. That was the last buying area that you had with this stock. But a lot of euphoria around Apple, a lot of good news being priced in pretty quickly. A lot of people are going to talk about still a very low valuation, which is true, and it's not to say that Apple can't continue higher from here, but very risky buying up at its current price level at $534. Okay. Yeah, and that's Apple brings up an interesting point because there are a lot of charts that look like Apple's right now. The market is on an uptrend. This is good. During market uptrends, you should be putting money to work. But you have to remember that this market rally has been happening for a while. It started with a follow-through day for the NASDAQ back on December 20th, big percentage gain in higher volume, and that is when the first leaders started coming out of the gate, late December into January. Now, new market leaders can come out up to 3 months after a follow-through day. So it's not out of the question that we still can see new leaders emerge. But the tricky part right now is when you go through the growth screens, and I do that on a daily basis, it's getting harder and harder to find buying opportunities. Okay? Apple is not a buying opportunity right now. Let's take a look at Intuitive Surgical, another strong performer in the NASDAQ 100. Shares of Intuitive Surgical up 85 cents today to $515.08. This is another stock. Very strong technicals, but also very extended after a move over 449. Other strong performers like MasterCard, Visa. Here's a look at MasterCard, a stock that is just not buyable up here because it's extended in price. MasterCard up another $3.52 today to $424.92. Why are these stocks working so well? I mean, it's pretty clear that new institutional money has been coming in from the sidelines. Hasn't been coming in spades, but there's still money out there that wants to come in, and that's where this market is finding its bid, if you will. Very strong foundation out there. So even if we do, see a pullback for the S&P 500 or NASDAQ down to a support level like the 20-day or even the 50-day, it's not gonna mean the uptrend is over. If nothing else, a 3 to 5% pullback for the market is going to give you a chance to get into some of these market leaders without having to chase them. So if you're looking for base breakouts at this point, looking for stocks that are in bases, poised to stage a heavy volume breakout from a consolidation area, there are really not that many around right now because the breakouts started happening in late December and into January. So I'd be careful about buying extended stocks here. Apple, Intuitive Surgical, MasterCard. Let's take a look at CMG, another strong performer that is just too late to buy right now. These stocks are going to pull back, and you'll probably get opportunities to buy them, but don't chase these high flyers right now. All right, folks, listening to Breakout Investing on TFNN. We'll be right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Quick check on oil prices here. April crude oil down $2.01 today to $106.55 a barrel. It's lost about 3% now in the past 2 trading sessions. Take a look at USO, a ETF that tracks the price of West Texas light, sweet, intermediate crude oil. USO right now down 35 cents, 0.8% to 40.83. Still holding above its 10-day moving average, as you can see at 40.36. So USO's technical picture still intact. A lot of oil and gas producers under some pressure today after recent price strength. Here's a look at Concho Resources, a fast grower that recently reported earnings. Reported earnings last week, and investors weren't too happy with the company's growth, even though it was strong growth. Shares of Concho today down $3.82, 3.4% to 109.14, and some other E&P firms under pressure today. Let's take a look at Pioneer Natural Resources, PXD, on the New York Stock Exchange. That is down close to 2% to 111.78, trying to hold just above its 20-day moving average at about about 110 or so. And finally, Continental Resources, CLR. This has been a big winner in the Ultimate Growth Stocks model portfolio. Working on a 3-session losing streak here, but still holding above its 10-day moving average. As you can see, shares are down 1.5% today to 92.56. Certainly, its technical picture is very much intact as well. All right, so that's a quick check on oil prices. How about gold? Gold for April delivery rose $13.50 today, 0.8% to settle at $1,788.40 an ounce. Let's take a look at GLD, the Spider Gold Trust, and we'll see that right now is trading up $1.83, 1.1% to 173.53. Technically looking pretty healthy as well. So GLD has a decent looking chart. And silver, don't quote silver a whole lot, but silver is interesting. March silver up $1.62 today, 4.6% to $37.14 an ounce. That's the highest settle since mid-September. Let's take a look at SLV, the iShares Silver Trust. This basically tracks the price of an ounce of silver. SLV up $1.62, 4.7% to $35.98. So good volume in SLV today as well. Taking a look at let's take a look at gold miner AUY. This is Yamana Gold. The gold miners are really a mixed bag. You've got large cap names like Barrick Gold, Goldcore, technicals good but not great. Yamana Gold looking pretty strong here. One of the better looking charts in the space, in my view. Yamana Gold is ticker AUY. It is up 34 cents today, 1.9% to $17.98 an ounce. This one's gonna maybe try for a breakout over $17.97. So AUY, one to watch. And in the silver space, let's take a look at AG. This is First Majestic Silver. This company is going to be reporting earnings pretty soon. Very, very strong bottom line and top line growth at First Majestic Silver. Really watching this one for a breakout, or I should say it actually is breaking out today in heavy volume over 21.20. Still within buying range here. First Majestic Silver up 6.6% today to 21.69. Again, the swing point was 21.20. That would be its intraday high right over here. So good technical setup here. Nice heavy volume breakout for First Majestic Silver ahead of its earnings report on March 5th. So First Majestic acting very well. All right, let's take a look at some stocks here. I want to check in on Ralph Lauren, Polo Ralph Lauren. Shares right now trading around 174.79, only up 33 cents today. But let's go ahead and take a look at a weekly chart for Ralph Lauren, and here it is. And boy, this is a nice technical setup here. I mean, the stock has made a big move in recent months, but love how this stock made a big move on strong earnings this week right here, and over the past 3 weeks or so, just tight sideways trading. This is a bullish chart, a stock acting well. When you see tight trading like this after a big weekly price gain like it saw 3 to 4 weeks ago, this could presage higher prices. So really like Ralph Lauren's technical setup here. You could watch the stock for a potential breakout at this point. Let's take a look at Constant Contact too, CTCT. First look at a daily chart for Constant Contact, another stock that made a big move recently and is holding gains nicely. Constant Contact is a provider of on-demand email marketing and online survey services. That's a look at a daily chart for Constant Contact. Let's take a look at a weekly chart here. And, oh, I know it's in here somewhere. I got so many charts in here. Constant Contact. Oh, maybe it's not. Do I have it or not? There it is. And again, folks, you can look at charts right along with me in Tiger TV, right on the homepage of TFNN.com on Channel 1 Live, and the show is archived on Channel 13 in Target in Tiger TV. So here's a look at a weekly chart for Constant Contact. Again, you see this big move during this week right here, and just nice tight sideways trading after that big move. So seeing a lot of charts out there that look like this. I would like to see a name like Constant Contact consolidate a bit more, move sideways a little more. That would just allow time for some of the excesses to be removed from the stock. But seeing a lot of charts like Ralph Lauren, Constant Contact, even a name like Michael Kors, a company that came public in December. You can see just a big gap up right here and then sideways trading. So this is where you tend to see alternate entry points from these stocks that gap up in price and then start to move sideways. So Michael Kors acting well. This is a stock that's up more than 100% from its December 15th IPO, around $20 a share. Kors right now is trading around $42.73. Big earnings from this company recently that exceeded even the most optimistic of expectations. So like the way Kors is trading as well. And then let's also take a look at SourceFire. FIRE. This is a provider of network security, hardware, and software. Same situation. Big gap up last week, and then tight sideways trading after that gap up. Trading like this is indicative of the healthy market that we're in. Why is the market healthy? Why is the foundation a bit stronger than maybe what it's been in the past? Because there's new money coming in from the sidelines, and that matters. It's not retail buying that makes for a solid market foundation. It's institutional buying, and there's been enough of it to make this market foundation stronger than it's probably been in recent months. So those are a look at some stocks that are holding up pretty well. Let's take a look at Priceline. I mentioned this one earlier in the show. This is a current holding in my Ultimate Growth Stocks model portfolio. Shares of Priceline today up $41.69, 7% or so to $633.23. Big gap up in price here. Earnings from Priceline very good. Earnings up 58% from a year ago to $5.37 a share. The estimate was for $5.05. Sales up 35% to $990.8 million. That was about 25 or 30 million above expectations. Gross bookings at Priceline. Gross bookings are basically the dollar value of all travel services bought by consumers. Gross bookings surged 52% from the year-ago quarter to $4.96 billion. They rose 65.5% overseas and 16% in the U.S. So a lot of concerns about Europe before Priceline reported earnings. I remember when the company reported third quarter results, they said Europe was not an issue. They cited a little bit of softness in some areas of Europe, but the results speak for themselves, and the stock is having a great day as a result. Let's also take a look at Jazz Pharmaceuticals, ticker JAZZ. Shares of Jazz Pharmaceuticals up $1. That's a 2% gain to $51.55. Boy, trading has been volatile in this stock recently, but the earnings were pretty good last night. Earnings up 86% from a year ago to $1.17 a share, and sales up 57% year over year to $83.5 million. I think it was in January where the company came out and gave very bullish guidance. The results last night exceeded even the guidance that they gave in January. Jazz's key drug is Xyrem, Xyrem. Xyrem. It's used to treat narcolepsy, or used to treat excessive daytime sleepiness in people that suffer from narcolepsy. Again, Jazz did a total of $83.5 million of sales in the quarter. $71.8 million of those sales were from Xyrem. So good numbers from Jazz. And let's not forget about another drug maker that frankly was looking a little weak headed into earnings. It had fallen below support levels, but Salix Pharmaceuticals, kudos to that company for a solid quarter. It is up nicely today, 8.5% to $50.07 a share. Salix makes drugs used to treat gastrointestinal disorders. Earnings at Salix Pharmaceuticals up 87% from a year ago, $1.18 a share. Sales up 31% to $155.2 million. So nice earnings from a couple of drug makers. Moving on, let's take a look at Chart Industries, GTLS. A wild day of trading for Chart Industries, but it is up near its session high today, up $4.07, 6.2% to $69.45. Nice little breakout recently for Chart Industries. This is a company that makes engineered equipment used in the production, storage, and end use of hydrocarbon and industrial gases. But good top line and bottom line growth at GTLS. And how about AutoZone? I mean, this is another stock that just does not want to die and go down. I mean, obviously, there's a fundamental story here. AutoZone gaps up today, up $10.29, 2.8% to $376.38. Stock that is, in my view, very extended in price. I just really haven't seen a good opportunity to buy this one for a while. Probably the best time to buy it was at the end of December, early January, when it broke out over that 340, 345 price level. But looks to me to be very extended in price here, but investors cheering earnings from AutoZone, an auto parts retailer. And let's take a look at O'Reilly Automotive in the same group. Good volume in that stock today. Most likely riding AZO's coattails higher. O'Reilly Automotive up 1.9% to $87.29. So auto parts retailers continue to do very well. And finally, on the earnings front, let's take a look at ZAG. ZAG is, to me, it's still a broken stock technically, but credit to the company for delivering a strong quarter. Stock is up 9.5% today to $11.02 a share. ZAG makes that protective film covering for the iPhone and other electronic devices. Good, solid growth. Earnings up 108% from a year ago to 27 cents a share, well above expectations. Sales up 131% from a year ago to $67.5 million. So a little mini breakout for ZAG, but the stock is still far off its 52-week high. I suspect it's probably going to be a long road back to its high, as it's going to face a lot of overhead supply. If it continues to work its way higher, probably going to meet with some selling pressure from people who bought in at higher prices and rode the stock lower between September, October, November, December, when it was really selling off hard. All right, mention the fact that there is not a whole lot of base breakouts happening right now. In fact, I think the best game plan for individual investors is not to chase performance out there, but to look at some of the real strong performers and wait to see if they pull back constructively. Wait to see if they pull back in light volume to a support level like the 20-day moving average or something like that. And then that's where you can enter the stock and maybe get a small position. That said, interesting breakout today from CF Industries. Base breakouts are really, you're not seeing much of them at this point, but CF Industries making a nice move today. But it is trading near its session low, though, so buying demand is drying up a little bit. Stock, after hitting an intraday high of 195.48, now trading at 190.87, still up about 1% or so, but it cleared a swing point today of, let's see, what was the swing point of 192.40, trading a little bit below that swing point now. So we'll see if CF Industries can muster energy for a meaningful breakout in coming days. All right, folks, listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
TF Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. Folks, just to let you know, right on the homepage of TFNN.com, don't forget you can purchase any amount of Tiger dollars between now and March 11th and get free admission to Tom O'Brien's all-day online master trader class. That's normally an $899 value. That class is going to be held Thursday, March 29th during market hours from 9:30 a.m. to 4 p.m. Eastern. But if you purchase any amount of Tiger dollars between now and March 11th, you'll get free admission to that all-day online master trader class. And Tiger dollars, of course, give you, you can use Tiger dollars to purchase anything you want on TFNN.com, and you can get an instant bonus of up to 10 to 20, up to 10 to 20. Let me try that again. You can get an instant bonus of between 20 to 30% on your money if you purchase Tiger Dollar. So be sure to check out that trial or that offer on the homepage of TFNN.com. Let's check on the markets here as we head into the close. S&P 500 back up near its session high. That's what you would expect in a healthy market. S&P right now up 4.5 points or so to 1372. Check in on the Dow here. Dow Jones Industrial also up near its session high, up close to 34 points to 13,015, and the NASDAQ Composite. Check on the NASDAQ Composite here, and that is, I'm sure, up near its session high. Oh, yeah. NASDAQ Composite up 20 points, 0.7% to 2986. Coming up tomorrow, we've got a fairly busy day of economic data. Interested to see what the second estimate to fourth quarter gross domestic product looks like. The first estimate was growth of 2.8%. Second estimate is supposed to be unchanged at 2.8%. So we'll see what fourth quarter GDP growth looks like tomorrow. Also, the Chicago Purchasing Managers Index tomorrow, and the Fed Beige Book, which is an anecdotal look at economic activity from, 11 Fed districts, something like that, 11 Fed districts around the country. So that's what we have coming up in terms of economic data. We've also got some earnings reports on tap before the open tomorrow. Costco will report earnings before the open tomorrow. Joy Global, that'll be an interesting one. In fact, let's check in on these names as we're talking about them. Shares of Costco right now up 25 cents to 85.34 ahead of earnings. Let's take a look at Joy Global, JOY on the New York Stock Exchange. Shares of Joy Global up 70 cents, 0.8% to 91.71. Good growth at Joy Global in recent quarters. Should see another strong quarter of growth. They're a maker of mining equipment and also SodaStream, SODA. This is sort of make your own soda with the SodaStream product. Shares of Soda having a good day ahead of its earnings report tomorrow before the open, up $2.45, 5.4% to 47.51. So stock has been showing good signs of accumulation recently. We'll see what that company has to say when it reports earnings before the open. After the close today, how about Universal Display, PANL, on the NASDAQ? This is a former high flyer that has come upon some hard times. Stock is up 95 cents today to 45.82 ahead of the results. It's expected to earn 6 cents a share, reversing a year-ago loss, with sales up 66% from a year ago to 17.9 million. Universal Display, they develop organic light-emitting diode technologies for use in flat panel displays and solid-state lighting. Also, earnings after the close from Verisk Analytics, VRSK, and Warnaco Group. Coming up next, the Tom O'Brien Show on TFNN. Have a great afternoon, folks. I'll see you back here on Thursday.